Hello, it's Mike Rasmussen, CPA Straight Talk with Small Business. Today is August 26th, and we have a Wednesday. Hope everybody's doing great today. I am going to present to you it has to do with what's called audit technique guides. The Internal Revenue Service, everybody knows who they are, has come out with these for a number of years, and they are a brief, that helps the examiners audit by providing insight into issues and accounting methods used for specific industries. So I have been following these by industry, which would mean by anything from retail to pizza restaurants to any small business. Each small business then has an NAICS, which we've been talking about, which is the North American Industry Classification Service. So every small business has an assigned NAICS code, if you will, and then there are audit technique guides, which are manuals that the IRS makes available to the public and to the examiners. And this is in addition to what are called internal revenue manuals, which are much deeper, that the agents use. And I'm not going to get too deep into it, but rest assured there are some brief highlights that you ought to be, that your advisor, your CPA ought to know about. And basically there ought to be some tools that you can know what's going to happen, like the terms of a bank deposit audit or analysis, or matching of gross receipts, or the unit volume production audit procedures. So some of these I'm going to briefly go over those. So getting in too far in depth in the weeds in this video is not going to be the intent. The intent is to show you where the audit technique guides are located, and walk through. I'm going to focus on retail, and then dive down into pizza, and I'll kind of go through a little bit of the history, but a little bit of where to find those. Okay, so let me show you my screen. So you would go to the IRS Internal Revenue Service, and you would go to the audit technique guides. So what this is on the IRS site. This is a list of all of the guides that are available by industry. So you can see right here, A through Z, aerospace, architect, art galleries. So you can take any one of these, and here's one of note, is cash intensive business. So you got bail bonds, beauty shops, car washes. So you can dive deeper into cash intensive, and you can see what they're looking for, this guide. Now, one thing I wanted to point out to you is that this guide is current through the publication date. This is April 2010. So the one thing to really notice about all of these audit technique guides is they're all fairly similar in generalities of how an agent would go about the process of proving income, because that's the bottom line. What you reported on your tax return, on your entity tax return, is what actually happened in reality, and that you did not underreport. Overall, so I can tell you, what happens is the Internal Revenue Service is looking for underreporting of income and overreporting of it, overclaiming of deductions. That's where it's at. So that is the focus of an agent. So keeping that in mind, it's when you're looked at from a taxing agency, it is the assumption is all income is taxable, any amounts that went into your bank account, and all expenses are disallowed unless you prove to me otherwise. In fact, way back when, the IRS's standpoint is this, and also if you don't have a method of accounting, we're going to assign you one. And here's all of these audit technique guides and internal revenue manual. Here's all of the ways that they're allowed to go in and do that. So this is showing that this is back in April 10th. So as I was going through all of these businesses, you can see capitalization of tangible property. That was 9 of 16. That was one of the current ones. Here's 2005 and here's 2009, and cost segregation. That's where you allocate all. It says take a restaurant or a retail establishment and you incurred expenses and you want to either capitalize those, but if you capitalize them a certain way, you can actually write off those expenses sooner based on lives that you assign. But that was back in 16, but you can see 13. Now the one that I wanted to show you was retail, okay? And the retail is right here, retail industry. Publication date 2 of 2009. And it's here it's saying the retail industry ATG is being revised. The old has been removed and the new will be posted as soon as it's completed for publication. So as of this broadcast, as of this video, this has not been done. So let me walk you through on where what it looks like right now. So this is the Retail Industry Audit Technique Guide. This is what it looked like. Very official, February 2009. And it walks you through various methods and then industries. And you can see here's books and records. Here's all of the way that, and so what I picked out was let's drill down into retail and look and see what it has for pizza. See, here's pizza restaurants, and it's very specific to pizza, and then it goes into restaurant and bars, okay? So let's go a little bit farther down. And what it is these documents are giving guidance to an agent of how to prove that your books and records are accurately reflecting a pizza operation. So here's a method that is offered from the IRS. One such method is the unit volume markup method. It may be necessary to contact the pizza restaurant suppliers to obtain the original purchase invoices on all identified cases. What? The ingredients purchased and used in the making of pizzas and grinders are used to determine total pizza and grinder sales. Okay, I have actually, I want to just share with you. I'm going to jump off. I'm going to share with you right here. I have been through and orchestrated many pizza industry audits. And in going through, number one, we get ready. And I was actually engaged for a very large franchise organization where this happened. The auditors pulled all the invoices in a geographic region for about 250 franchises and pulled the food purchases. And then what happened is took the standard food purchase average from the franchisor, the data they basically received from the franchisor, and compared it to the purchases from various clients and then from these franchisees. And if that ratio wasn't exact or within a tolerance, the IRS made a adjustment, and you can call that a soft adjustment, made an adjustment to the franchisee, of which was additional tax because their ratios were not correct. Wow. So that does happen. It is happening. And more the states, what is also happening is that the agencies, state taxing agencies, IRS agencies, and are actually hiring as consultants, CPAs like myself, that would go in and go, well, how do I tell how to underreport, or how is income really underreported, and how do I go pull invoices? How are you keeping books? So obviously, since we are paid and we know how to do that, there are a few account CPAs that then go to the IRS and the taxing agencies and explain how this all works, or hire them on. Okay, back to the. So here it is, and here's just a method that was fine, and it's a long, intensive method to go through. Okay, so then you can see one of the other terms I want to talk to you about is internal control. You can actually search for internal control throughout all these documents. And it says right here, restaurants have a high rate of turnover of employees who often have access to the inventories as well as the cash. Yes, they do. As such, there is potential risk of employee theft and embezzlement unless the restaurant implements and maintains a set of good internal controls. So, owners have the information supplied to them from the accounting system and make accurate and wise management decisions. That's if you've got a proper accounting system, okay? Which is, so if you're a franchise has systems that in the restaurant world have, or in the restaurant, in the franchise system, there are systems, and those systems have controls in place because the franchisor is relying on those to receive their royalty payments for the brand. So when you move into the independent world, in any retail restaurant, any brand out there, any small business that's a non-franchise, you move away from internal controls, which is very important. The IRS then relies. So here it is. The challenge for the examiner is to separate restaurant owners who are in compliance with tax laws from restaurants who have failed to satisfy their tax obligation. Should focus on, here it is, right? Internal controls. So do you have any unreported income by the restaurant? And this could be any small business. Cost of sales, which was that method. And here it happens to be unique for restaurants, unreported tip income by the employees. Okay, so each there are. Now, if you go to there are also what's called MSSP, which is market specialization programs. And in this examination special, early on, back here in 2002, was when this all started, where we've ended up at the audit technique guides on the IRS website. They went in by industry, but this was an early on. And here is one of the goals, is to reduce, and you should know this, is to reduce audit cycle time by helping agents become familiar with specific industries prior to starting an examination. This reduction of audit cycle time is key goal in establishing customer satisfaction. Now, this was written back in 2002. Here we are 18 years later. Now there has been the IRS friendly initiative that's out there. In a recent national survey, when an auditor does not understand the business he or she is auditing, the outcome can be unfair. Appealing the outcome is out of the question because the loss of income in appealing is greater than the amount owed to the IRS. Understanding the industry being audited is essential to determine the correct tax liability, fairly administering the tax laws, and reducing audit cycle time and increasing customer satisfaction. What's that mean to you? What that means is agents in any taxing agencies are files that something is out of the ordinary. However, those returns or reports are selected, and an agent comes to work and has a desk full of those and has to actually do something with them. And audit cycle times, just so you know, is one of because I know a lot of agents, they get graded by moving their client load that they have to go audit off their desk. That's an audit cycle time. How long does that take you to start and stop? So I have always taken the approach, as well I'm recommending you do, is reduce that time. Reduce the audit cycle time and really beat the agent to the punch. Beat the agent till you know what they're going to do. We have the instructions here. For example, you know, at the end of this document, at the end, way down here at the end, I'm going to say there are 100 ways in Appendix 3, 100 ways to steal. So here's the common methods and indications of underreported income. Well, flip through those briefly and make sure, if you're ever asked, you have an answer for one of those. For example, record a smaller sales amount on the daily operating report than is shown on the cash register tape. This reduces the amount of cash that must be deposited for the day. Yep. So if you're ever asked any of these, you would have a response that you could go through if you're ever talked about. You would already have an answer to each one of these. So these are the tools that the agent's going to show up with. So you do your homework, and before an agent actually shows up. So for example, somebody in the pizza restaurant back in the Northeast in 1995, this was a very specific to the pizza restaurant. So skimming. So skimming was what the agents had to go look for. So here's a report that they issued. Pizza industry skimming cash, payroll. So I just talked through here. So here was a project almost 25 years ago conducted by the Providence because pizza restaurants are basically cash businesses. The potential for skimming exists. And if you just go through and you can see how skimming, what are they looking for? How are they doing it? How are they going to find it? And bottom line is if you have an industry with your NAICS code, you've identified, we've done the research, what are the taxing agencies looking for? Okay, you may as well just make sure that your accounting records, again, your accounting records already defend the way that the taxing agencies are going to look at your operations based on your NAICS code, so you can take less time to reduce an audit cycle time if you ever get looked at. But more importantly, peace of mind, so you can focus on bringing people I'm pointing to your door, so you can bring people into your small business to not worry about this stuff. Okay, so this should be an assignment for that I do, and what I will do for you is to go in, buy your NAICS code, and find out what audit guide is out there and point out to you deficiencies in your system. Okay? All right. Then there are the internal, to even go any deeper. You go into what's called the examining. This is the Internal Revenue Manual, and you dive even a little deeper here. Here's the examining process. All of these are documentation that the Internal Revenue agent has to actually provide in a written up document to prove the adjustment that they're making on a potential, on a client, what would be called a client, which would be you as a small business. Now, again, I went into the NAICS.com. We've talked about that. And I typed in restaurant. Here is limited or full service. Let's just go fast food restaurants and full service. I believe with COVID-19, we may be having additional, because when you look at the limited service here, there may be, here it is, pizza delivery, family restaurants, takeout, eating, fast food. I believe there possibly could be new NAICS codes, that accommodate what we have going on in the pandemic right now. Takeout, different combinations that aren't even listed right here, so that it makes it easier for the agents to say this is what you are. Remember, when a taxing agency sends you a notice, or if you ever get contacted and of any of your reports that you sent in, there is going to be, in my opinion, you want to educate that agent as fast as possible about the industry in your favor, and point to all the rules and document audit technique guides, internal revenue manuals, anything that you followed, that you followed in your books, and do a little bit of the homework for them, hand that to them. I have learned 10 out of in over 250 audits I've done by doing this process and spoon feeding. If I ever get engaged, which is really not likely, but if I ever get engaged, just because of the way statistics, which we can't control, but statistically, if you were to happen, your small business got looked at, if you will, or audited, you got a letter and you had to respond. We follow the exact audit technique guides and doing the homework for them and following the guidelines, so that here you go, okay? And keeping them away possibly from areas that we didn't fully comply with some of the audit technique guides, okay? Okay, hope that helped there. So I've been talking to you about the audit technique guides. from the Internal Revenue Service. It is based on, you look at your NAICS code, and those are very specific on how an agency, I have been referring to the Internal Revenue Service, but every state has its own state taxing rules, and every for sales tax or use tax, and then you've got property taxes. Any tax compliance has rules, recommendations if to go look at to make sure there's no underreporting of income, and no excessive expenses that are normally allowed, ordinary, necessary. Okay, all right. So I'm gonna end right here. I'm gonna go. If you wouldn't mind, I would appreciate you going to. This is recorded Facebook Live. If you go to the page and hit the like, that is appreciated. If you have a topic you want me to research and investigate, which is what I did today, someone wanted to know about Audit Technique Guide, you send it to me. Then if you could jump over at the end of the day, we will go and have that posted up to my YouTube channel. If you could subscribe, that would be appreciated. And then if you have any questions, you can go to my website, HiTechCPA.com, and take a tour, go through, and send me a comment. What I'm looking for are topics that I can go research and bring to you, because it's not just you, it's every small business more than likely has the same thoughts. And in one small business, there's a commonality between all of us as far as what I can share. Okay, so hope you have a great day. Hope this was informative. And remember, Audit Technique Guides, what are they? Here they are. You know where to find them, at least for the Internal Revenue Service. Every taxing agency is going to have something similar that you need to follow. Do the work before you get knocked on. Mike Rasmussen, CPA, Straight Talk for Small Business. Have a great day.